There are job revisions coming out in 15 minutes, or we can talk about the NASDAQ trying to tokenize securities.
We've already talked about the NASDAQ trying to tokenize securities this morning.
Okay.
Do you have anything negative to say about that?
Well, I'm curious about some of the, you guys haven't covered all the questions that I'd be interested in asking.
Okay, like what?
Do you think that tokenized shares will actually fragment liquidity, creating two pools of trading, or will the exchange's structure keep all that consolidated under one roof?
First of all, no, not at all. Why would that happen? I'm just curious.
I'm just poking questions because this is an interesting topic, and you have a lot more institutional knowledge than the average bear.
First of all, I don't think that you're going to be necessarily able to tokenize. I think it's going to be very limited as to what you can tokenize. I think the tokenization opens up an entire new marketplace for investors. And so for that reason, I'm bullish. I don't think tokenization will impact markets that you can already trade. There's no reason to use, there's no reason for you to trade tokenized IBM, right? Mm-hmm. What would be the reason?
Well, I mean, to me, that was actually a follow-up question. Retail investors don't wake up asking for tokenized shares of Apple or Nvidia. They just want cheaper commissions and tighter spreads.
And I don't think they ever will. But retail investors in the UK or in Singapore might want tokenized Apple because they don't want to convert to US dollars. So the problem is that if the US is still going to be the center pool of liquidity in the world, not everybody wants to convert to dollars, especially when the dollar's in crash mode. And so, I mean, there's no question that the current administration wants the dollar lower because that helps, that helps their case, I guess. And so with the dollar, I doubt the dollar is going to rally anytime soon. And so I think that scares people. And I think if you go with tokenized shares, it's just a lot cheaper. I mean, tokenized buys and sells, it's just a lot cheaper. That's all it is. I think it's just a function of cost and access. So I don't think it changes anything we do here. I just think it makes more markets available to more people. But if you tokenize something, you still have to own the underlying.
My follow-up would be if this doesn't change things for U.S. traders, then if liquidity, order priority, NBBO, I know that's being changed. So then really for the U.S. retail trader, this is a story, nothing more, right?
For the U.S. retail trader, what I think it does is it opens up different parts of the world to U.S. retail traders, and I think it opens up non-listed securities to retail investors. Let's just say Tony wanted to buy a piece of SpaceX, and somebody wanted to put together a pool with, $50 million of SpaceX in it. Then he can buy tokens potentially and trade SpaceX, whereas otherwise you can't do it. So I think that in that sense, if you trust who's creating, who's actually creating the underlying, creating the token, I think that's the whole thing. But I don't think it's that simple. I just think it is going to be the future to complement the listed marketplace.
So just one more question on this, and apologies for the chainsawing in the background. And I didn't hire people just to make the noise to prove this story. If tokenized securities really shorten settlement cycles and reduce clearing risk, how do you see that changing the role or profitability of market makers and liquidity providers, Tony? I feel like that's an angle that you'd be interested in.
I don't even see how that applies.
Yeah, I don't see how it applies either.
I mean, there's no market making. You're talking about non-listed. You're talking, for the most part, tokenization will widen the playing field. It's not going to narrow it. In other words, there's nothing that you currently trade that's going to be impacted by tokenization. I don't think. Everything is that you can't currently trade is going to be what's open through tokenization. They're too smart. They're not going to cannibalize their own business.
But does it open up stuff like in Europe to us, let's say?
Yes, that's what I think it does. But again, it's not really rocket science. So you go out and you buy 100 shares of IBM, right?
Yes.
And then you issue 100
tokens.
100 one-share tokens.
Mm-hmm.
Okay, just because you have to back it up with something. It's like a stable coin. That's it.
Yeah. You don't get 1,000 tokens.
Right.
Right.
It's not the producers. You can't
Yeah.
sell 1,000 tokens for 100, like it has to be collateralized. If it's not collateralized, then you're going to have massive fraud.
Sure.
So that's why you want somebody like the NASDAQ doing it and not somebody like Binance doing it. Or FTX. That was the whole issue. So I think that's the key is who's ever creating the underlying, who's ever holding the pool of stock, and there's some risk for that person or that company. What happens? They're going to be low on the underlying. It's not that easy, I guess is my point.
Mm-hmm.
Well, let's switch gears here. In a few minutes, we're going to have the U.S. labor market revisions. I know that this is something that really excites you guys, but last August, we saw the economy at 18,000 fewer jobs, than previously anticipated. We're looking at a revision lower by about 900,000 potentially in 9 minutes' time. We've already seen a big bump in Treasury rate cut odds, though, here, Tom. And Sunday night, you were saying that when we're up in this territory, the Fed can kind of go with 50 basis points and really not be too worried about the market not expecting it. Over the course of this week, rate cut odds for 50 basis points have gone up from 7% to about 14%. Poly market, they started the week at 2%. They're now up at 18%. So traders are starting to line up and think this is a possibility. Do you think that this is a buy the rumor, sell the news type of event for things like treasuries and gold, though, which gold this morning ticking over $3,700 an ounce?
Do I think this revision is?
Do you think that the rate cuts when they arrive in September will be a buy the rumor, sell the news event for the market?
I don't know if it's going to be a buy the rumor.
Because of where we are in the market, not because of
we're
anything that
record highs.
Right.
I mean,
Has the rumor already been bought then?
you mean for the last year in 2025?
The
Yes.
past 3 weeks, month? Okay.
I mean, in the past for 2025, or let's say since April, the answer is yeah. The rumors, and I don't even know if it's a rumor anymore, but this rate cut is overpriced as far as I think it is
Overdone.
It's overdone.
I think even my neighbors know about it. My neighbors are oblivious to everything. I mean, really. I mean, when it comes to the market, they don't. Not their thing. Even
I'm waiting for my mom to call me and say, "What do you think about this rate cut?"
Everybody's waiting for the rate cut before they do something.
Yeah. I don't know, Chris. I mean, I'm kind of feeling like everything. I'm kind of feeling like whatever moves this market eventually is going to be something that it's what's ever least expected. Like, there's just no way anything that everybody's chattering about is going to have any impact. I just don't see it. I still think there's some really risky areas going forward. I don't think it's the rate cut. I don't think it's the bonds. Haven't thought that all year, but I do think there's, if you want to talk about like where's the most downside, what do you think is the most downside?
What market? Has?
Yeah, what marketplace?
I mean, I think the equity market, but probably the NASDAQ. And I would throw gold in there too, man. I think gold is.
You think gold is?
Yeah, I just think gold is.
I think,
again, I am short gold and paying the price, so I've been wrong. But I think if you're going to look for a magnitude of a news event, I could see gold down, $360, a 10% move. That's what I'm going with. A lot sooner than I can see the market down, 2,300 handles on the NASDAQ.
Well, it's so funny because I think Bitcoin has a lot of risk. And
yeah, I mean, that's going to have the highest volatility. So
I think Bitcoin has a lot of risk. And I think, let me just see.
I mean, when they sell assets, they sell all the assets. And usually the one with the highest implied volatility has the biggest move. So I'll give you a nod to your Bitcoin.
So I think Bitcoin and I think tech stocks.
Ilya's been bringing up an interesting point about Bitcoin, and we keep talking about it as an alternative store of value relative to the dollar. If it was truly that, wouldn't it be trading more like gold and less like equity markets right now? It's been very choppy. It's been moving sideways, effectively tracking the NASDAQ.
What?
Gold is on its own Yeah, Bitcoin isn't performing like gold is in this, reach for other things than the dollar period of history.
Because it already had its gold movement. It had its time to shine.
You remember, it wasn't too long ago. I mean, basically a month or so ago when it was 124,000. Right now it's under 114,000.
Yeah. I just think about where are the biggest pot odds? Where's the biggest risk in this market? And to me, I feel like there's three areas of incredible.
Meanwhile, this is the first dollar move lower we've had in the market.
I'm not even saying
gold is actually up.
Nasdaq's still up, but I'm just thinking of like where's the most hype? Where's the most bubbly stuff? It's got to be digital assets in that whole ecosystem. It's got to be the IPO market, and it's got to be some of these AI stocks. I don't know what else it could be.
You would think.
Yeah. I mean, but
do you guys look at the decline in utilities over the past few weeks as one of these indicators that the AI trade is fading? Right, all these electric companies were doing so well this year.
It sounds demonic. Okay,
what is that?
It's this chainsaw in the background, but it sounds demonic.
The utilities are doing what?
If you take a look at like XLU, the utility companies have been slugged here as this AI trade has come into potential question. We had the MIT study. We have the report that fewer firms are adopting AI. That crested about in June. This is a slide that's going on from Apollo Global Management that AI adoption rates are falling off again right now.
Because of the utility usage?
Productivity increases.
I know, but what is the utility story? Like, what is that?
The utility story last year and this year was that there's excess demand without enough power supply within our system to functionally build all these data centers. And so now that XLU is pulling back, it may be an incremental indicator that demand for AI related services is falling.
Still $82. I remember when it spent like most of its life in the 57, 67 range. Mm-hmm. It's still $82, and these utility stocks are still, to me, they seem super rich. Mostly people buy them for dividends, but I don't know. I don't know about that little. I'm not sure, Chris. Your call. I mean, Tony.
Personally, like utility stocks. I have a decent position in EXC, which hasn't been working for the past several weeks. It's up this year, but it feels like there's a turning point right now. I've just been following the news around all this AI talk in data centers, and there's a lot of anger about the cost of electricity going up. A lot of data centers are not being approved now on municipal levels across the country.
And honestly, I don't blame them. I don't blame them because I'm not sure who's going to end up paying for all this stuff. I really don't. I don't get it. But and the crazy thing about these data centers, they're so freaking expensive now. Like the prices are outrageous. Like I don't know how these tech companies are going to afford all this stuff. The prices are outrageous, and you can't even get in. Yeah, it's a constant battle here with our data centers and where they're located, how much they are. The prices are just astronomical.
Even the S&P is back up $1, south enough cancel crash.
I mean, do you see anything here so far?
No, I see nothing so far.
I'm following Mike Butler here on S&P 500 today. I did a short iron condor for the 0 DTE. Let's go. Let's see what happens. But the market has no reason to move today, as far as I'm concerned, if we don't get a nuclear bomb here in less than a minute when this jobs revision is released.
Well, we sold some 0 ES.
They worked out nicely.
Worked out. I just covered them. Probably down $1 from where we sold it, but let's see. I want to see your big number revision here.
It just came out. Even the S&Ps were up $1. They're up 3. Bonds were down around 6. They're still down around 6. Even the S&Ps up 4. Bonds down 4, catching a bid now. Only down 3 or 4 ticks.
I'm not sure that this revision was that
monumental.
Minus 911,000 jobs, which basically means the economy added, we'll call it, 70,000 fewer jobs per month than previously expected, which tips a bunch of the previous jobs numbers into negative territory.
bonds are down too in the S&P
The note-
4. Much to do about nothing. So the
notes-
volatility in by 10 cents.
The biggest move I saw from this thing was gold up 34 now, and the notes up,
I was going to mention that because I'm sure gold ends up 1%.
and they took out yesterday's high in the notes. But nothing else. S&Ps are actually down, Mr. Batista.
Even the S&Ps are down $1 now. You are correct. Volatility up 20.
But it's a crappy. This is a crappy trade.
Yes. Not too much to do about anything right now. We've been oscillating between unchanged all day.
Yep.
We're going to get our cuts, just maybe not for a good reason.
Thank you, Mr. Vecchio.
I almost made a joke, but I decided not to. It was a crude one. We're going to take.
What do you mean?
Does it really matter? I mean, it's good and better if you get the cut.
Yes, it does.
Yeah, I mean, it depends.
Yeah, I'll bring this next week, but I have a Excel chart of all the different types of cuts you get since 1980, and when they're emergency, whatever the market reaction washes over,
No,
if it's in the context of a recession.
Don't do it after because you can spin it. Give me it right now. What is the trigger that makes it a bad cut? What do they say that makes it a bad cut? Like let's say they cut a quarter. Let's say they cut a 0.25%, not a 0.5%. Because if they cut a 0.5%, I too might think that might be a bad cut for the wrong reason. But if they do a 0.25%, what could they say that would make it a bad cut?
They would introduce dramatic revisions lower in their growth forecast that's coming out next week. They'd also boost their unemployment forecast substantially, signaling that the reason why rate cuts are coming is because they are anticipating weaker growth and a much worse jobs market.
Okay.
Now, so last year when they gave us cuts, what did they do? They upgraded growth. They had inflation stuck. And so it's like, well, so they're giving us rate cuts in a good economy? Fine. This time it's a little different.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.